Good morning, everybody. Hey, welcome to Monday, June 22nd. Hey, this is the last full week of June. It's so hard to believe that, man, in a blink of an eye, we are almost halfway through this year. As Dave and I get ready to talk today, we are at the very end of earnings season. So not a lot to come out about individual companies, but we'll have some news to talk about that affects the financial markets as we prepare for this final full week of June. Hey, stay tuned. I'm looking forward to our conversation with Dave this morning.
Good morning, 105.7 Light FM. I'm at 8:38 here. That's 22 before 9. Time to check in and find out what's going on your money. How is Wall Street treating you this morning with your IRA and your 401k? Sometimes I can't explain the moves, and neither can Phillip Statler, and frankly, we didn't get enough time to find out whether he could either, but let's go downtown and find out. Phillip, good morning. I hope you had a happy Father's Day.
Good morning. Hey, I did, Dave. Both of my kids and their families were here, so great weekend.
I'm glad. We had a good one as well. It was nice and peaceful. Both my kids made the phone call and sent me a nice little gift certificate for the golf course, which is always appreciated because that's my therapy. So it was a nice Father's Day. We didn't get a chance to talk about this before we went on the air, but Friday the Dow had kind of a crummy day. They were down 209 points. S&P was down by a little under 18, but NASDAQ showed at least a modest increase. Looks like the blue chips got whacked by a little bit more than the tech stocks did, didn't it?
Yeah, they did actually. The tech stocks actually ended up, you're right, basically flat for the day last week. But for the week, I think it was I don't know that the S&P and Dow actually made it positive for the week last week. It was pretty close there. If they could have ended up positive yet on Friday, I think they would have ended up positive for the week. But
it was one of those herky-jerky weeks that we're almost getting used to, wasn't it?
Yep. Yeah, well,
and we've got the beginnings of more of it because there's concern out there about whether it's the continuation of the first wave or the beginning of the second wave of the virus bug. It's definitely making the markets nervous, so we can probably end up expecting another herky-jerky week. Monday's on the quiet side. The only real macro report we got coming out on the economy that I saw anyway was existing home sales, and we're due to get that at 10 a.m. this morning. Are they expecting good news, bad news, or somewhere in between, or haven't they said anything?
They're expecting them to be up about four points. So they expect to come out at I don't know, is that 400,000 existing home sales, I guess, or maybe 4 million. I'm not sure exactly how that number points out. And then tomorrow we have new home sales.
Mm-hmm.
Hey, the big day this week's going to be Thursday, though.
Okay, I know we got claims. Have we got a GDP report coming out on Thursday?
We do. We have the final GDP estimate for the quarter.
And that will determine whether or not we're officially in recession, because we can assume the second quarter is going to be one, right?
Absolutely. I mean, I don't know how it won't be.
It's going to be a hard one not to see at the very least. As we said, Monday's a little bit on the thin side as far as news items are concerned. You and I were giggling, I guess, for lack of a better term. Normally when the pundits come out with statements about what they think the market's going to do, they're always incredibly conservative. And I've got two almost opposite ones out today. J.P. Morgan says it's time for investors to be a lot more selective, while UBS Warburg is saying the Fed's going to win this thing, and we think you all ought to get back into the market. When the guys with 100,000 times more money than we've got pretty much can't agree, we've got a really uncertain future ahead of us, don't we?
Well, that's true, and we continue to see that, right? We always have people coming out that say, hey, I'm bearish, I'm in cash, or I'm actually short in the market. And then you've got the other side that says, man, you shouldn't have cash on the sideline. You should be all invested. Now's the time. So how do you know what to do? That's the hard question. And that's why I believe that, the only thing you and I can do is manage the risks that we have in our portfolios.
Exactly. The risk is the one thing that we can actually control. The element that we put at risk, that's a crapshoot, whether we like it or not. It's an even bigger crapshoot. We're in a situation where one bit of bad news can make the market tank by 3, 4, 5 percentage points in a day, and good news can make it go up by a similar amount. Really, about the only thing we can control is how much of our portfolio is at that level of risk.
That's right, and that's the key point that people need to realize right now. And hey, if you're young, man, you're just putting it away. It doesn't matter; just put it away, and you should come out okay over time. Those people getting closer to retirement, well, it's a little different story for those folks, Dave.
Absolutely. The brokers call it dollar cost averaging. And for a person in their 30s, their early 40s, it's the wise way to invest because while the market goes up and down, if we take a 5% dump on the market one day, you basically got yourself a bargain when you put your $50 or your $100 or however much you allocate on a daily basis into investment because you know it's going to come back over time. For those of us that are a year, 2 years, 5 years, 10 years away from retirement, we've got a little bit different outlook, don't we?
Absolutely, because we don't have time to make it back. So a big downturn in the market could change the way we view retirement. Could make you have to work a little longer, and so those are things that people need to take into consideration, given the volatility that we continue to see in this marketplace.
Yeah, absolutely. And volatility is a very conservative term for it, the way it's been going of late. One bit of news that did come out this morning, and once again, we always say that the absolute numbers mean nothing because every Fed district uses their index and calculates it differently. But the Chicago Fed, after we got a lot of the East Coast Federal Reserve districts last week saying, hey, things are a lot better than they were, the Chicago Fed basically said the same thing. Their May report, let's back up. The April report showed an index of minus 17 point something. Their May report said that the Chicago business activity went up to a positive 2.8 number. Once again, a substantial turn to at least modest business activity in the Chicago area, which I find hopeful because Chicago is another one of those hot spots for the COVID bug that really hasn't completely reopened yet.
Well, that's true. And anytime we see that kind of change in those type of indexes, it's a good sign that business is getting back going again. And that's what we want to see going forward. One of the other things that I saw, and I find this one kind of interesting too, Dave, is that banks are swimming in money. There's over $2 trillion that were deposited over the last month or so. And they say that it's because people are still concerned. So what are they doing? They're hoarding their money, right? Well, we're not spending it. A lot of people are still trying to keep their money in the bank. So if this thing continues to last longer and longer, they can withstand however long it goes.
That was one of the curiosity points we brought out when we got the consumer income numbers last month. Consumer income went up, consumer spending went up, but the savings rate also went up markedly, which is kind of counterintuitive to the American consumer because as a rule, we get it, we spend it. Not quite so much lately.
That's right. I don't know if you saw this one or not either, but Apple came out and they're closing several of their stores. I mean, not just several, but over 100 stores throughout the United States because of the increased cases of coronavirus we're seeing. So they're going to close some stores back.
Yeah, they're looking at the bug and the hot spots that are coming out. I noticed that Brandon and Sarasota, for Apple geeks around town, those two stores are not on the closure list, but they've got a few stores in some hotspot areas. They're saying, whoa, boys, let's back off a little bit and kind of go back into shutdown mode. That would not be good news if that was followed by a bunch of other major change.
Well, you're right. You're absolutely right. It would not be, but and we'll have to see how other retailers start to play that.
Understood. As we've been mentioning on the news all morning, I mean, Highlands County is now up to 226 cases. Our neighboring counties are, relatively speaking, going through the roof. DeSoto County only has about a third of the number of people in it that Highlands County does, and they're up around 450 cases. And Polk County, up to our north in a larger turf, they've got over 2,000 now. And the hospitalizations are also looking like a higher percentage now than they were before, at least in our home county. So there's reason to be concerned. And as I say when I'm talking to people on Facebook and in person, panic? No, but it's a time to not be stupid, and that counts with both personal behavior and in your finances.
Well, that's true. Hey, let's talk. I got one key point that I want to talk about just a second here. China, we're always talking about imports, exports. Well, China, they have to bring in a lot of pork, chicken, that type of stuff. They import that. Well, China suspended the imports from chicken from Tyson Foods. Yeah, because of the coronavirus affecting some of their plant workers. So that's a big deal to Tyson Foods, and they're obviously trading down because of that, about 2.5% this morning.
Don't I recall one of the big processors, and I'm wondering if it's Tyson, doesn't China have a big position in that stock too?
That I don't remember seeing. It could be, but I'm not positive.
Now, I know they took a major position in one of the big protein processors, and I can't remember whether it's Tyson or not, but that perked my ears up when you mentioned that they'd suspended a Tyson shipment down the line. Ouch. Yeah, caution is the watchword. Setting up the table for this morning, as mentioned, Friday's close was a mixed bag. NASDAQ was green, but not very doggone much. Dow was down 208 points and change. S&P was down by 17 and change. Again, it was not an earth-shakingly bad day on those two indexes. And the NASDAQ was only up 3 points, which, as you say, is pretty darn close to flat. 45 minutes before we open this morning, Phillip, what are we looking at so far?
You know, we are off our highs in the futures market. When I first started looking, we were up over 200. When I got here to the office, we were about 175. We're down below 140 right now. The Dow's at about up a half a point, but still less than 130 points up for the day right now. The S&P 500 is up 0.6%, $19. NASDAQ's up 0.75% or about $75. So everything's green, but not near as green as it was when I woke up this morning at 4:15. So, hey, when we look at gold and silver, they're both trading up also. Gold or silver's having a great day, up 1.4%, back over $18 an ounce. And we've got gold up almost 1% to $1,769 an ounce. Crude oil is shrinking just a little bit this morning, Dave, down 0.6%, below 40, down to $39.58 a barrel.
That is an improvement from Friday morning, if I recall correctly, though, isn't it?
I think it is.
Yeah, I think we were just in the mid 35 to 40 range on Friday morning, so actually we're getting a little bit firmer in the upper part of that range and get us closer to 40. By and large, red ink on the worldwide markets. Japanese and and other Asian markets turned down a little bit at the close early this morning. Europe is kind of looking at our herky-jerkies and saying, it's not real red, but down by about 0.25 point, both in Great Britain and in Germany, as we look at it midway through their trading day. We talk about uncertainty, Phillip. That means managing risk, and we spent some time talking about those strategies. How do I find you to manage the risk on my retirement portfolio?
Dave, they can give us a call at 863-382-0037 and schedule their no obligation financial x-ray, and that will help them determine how much risk they have in their current portfolio. Also, follow us on Facebook. All you have to do is search under Statler Financial Services. You'll find us right there. Follow us. We rebroadcast this report every day. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on Highlands News Talk, 7:30 a.m.
All righty, back here again tomorrow morning on Light FM too. Phillip, thank you so much. You have a marvelous rest of the day, all right?
All right, man, you too. Talk to you tomorrow.
Thank you much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Let me just say, I hope to have a little spoiler for you tomorrow, a little surprise. I hope you'll join me tomorrow for that little surprise. You'll just be overjoyed. Thanks again for joining us. I hope you have a great day. I look forward to seeing you again tomorrow morning. Bye now.